good. All right, well, let's see if I can get an overlay, though. I need an overlay. Okay, there we go. Bingo. Testing, testing. You don't have access to this. Hide that. Probably just want to put this over here. And let me just put it in front for now. So I want to still try to work on this. Overlay for brakes. Edit. Huh. Oh well. And it's the volume. I wonder if the volume's working. You don't have access to this feature. I am live. Oh, here. Oh, webcam. You don't have access to this feature. Channel live settings. Why does it only do that? Huh. Interesting. Okay. Well, if there is anybody listening, I'd appreciate if there was any feedback with volume. Don't really need much else, I guess. Besides that, I just like doing this because it really helps me think better when even if I'm talking to absolutely nobody. It allows me to have more clarity and just kind of get more done. But it's funny because I can't hear. Usually you hear like something, but I don't hear anything. So there's a good chance I'm just talking to myself. I guess I can try to go to YouTube separately and see if I'm. That's loud. Nope. Your channel. View your channel. That's some live. Testing, testing. Okay, I hear it. Definitely a better microphone. This microphone picks up on too much. All right, well, let's continue. Let's get going. Looking at the broader market here to start. Check out QQQ and SPY. This is the daily. So we can see that QQQ is opening towards the high of the range. We do have a priority close right here. So just kind of the psychology behind what's happening here on Friday. So on Thursday we have a really uh, strong close for bears, even though when you zoom out, you can see that we're over the moving averages. We're in a daily uptrend. If you're a price action trader, we're above these highs here, which is pretty much the next area after the breakout where you would assume there would be some interest in bull buying. And once again, being over all of the moving averages here, even my smallest one here, which is the 9 day, uh, it's a good look. And then on Friday, we have an actual gap up. So, the bears who are maybe aggressive in getting in here and holding overnight wake up and not are very happy about the situation there. But surprisingly, again, they make another attempt to push price down here. So, you don't really expect that on a Friday, right? You don't really expect to see, the bears open up to a surprise when the overall market is bullish and then for them to take another shot and actually it work out here. As you see, we close towards the low of the day with a little tiny wick at the end of the day, which could have just been like day traders profit taking going into a weekend that has a potential lot of headlines with the snap and all that stuff, the wick and all that nonsense, knowing that Trump might say just about anything in that situation. And now again, same thing as Friday. We're opening towards the top of the range here. Do the bears again have an opportunity to say, "Hey, let's try one more time"? But like if you look at the everything else, if you look at everything else, the fact that we're in a daily uptrend, the fact that we're above, important moving averages, you give your two best shots as a bear here, and then you find out that it's just not enough. Do you really want to come back and fight again? Like, I would say probably not. So I'm actually leaning sort of bullish today, just simply on the fact that I just don't think that bears are in a situation where they want to be really investing a lot of their time and effort on such a strong indice here. I think that the bulls have the upper hand today. Let's look at SPY. Actually, before we look at SPY, let's go to the 1 hour and just see what it looks like here on QQQ. So it sort of looks like an EQ here. We could go on the NASDAQ on the 4 hour and see if it has something similar. Yeah, I mean, we have this big, nice, long move up, sideways range. Bears kind of get something going here. And now we're sort of in this very tight equilibrium here. So you would say anything under 26,159 would be a 4 hour lower high. And yeah, I mean, well, again, bulls just looking fairly strong. This is clearly a bull flag at the moment for now. So let's take a look at SPY, see if it looks similar. So SPY, the same thing, holding the 9-day here up towards the top of the range. Let's take a look at the hourly. Hourly looks a little bit more, has a little bit more clarity, I guess you can say. You have this higher low, lower high, maybe looking for some sort of lower high to be set. So for me, I guess now that we're zooming into the hourly time frame, I would say that I am patient, I'm a patient bull here. Very hard for me to look bearish in any way, shape, or form. At least on these names. Even though I do have a bear setup that I was looking at earlier today. But from the broader market standpoint, for today, Monday, November 3rd, it'd be very hard for me to look bearish here, um, just because of the psychology behind it. But I do think that when you zoom into the hourly or the 4 hour, depending on what you're looking at, you can have a better case for bears because it's a spot here where you have this huge pull down, and then once again, you open up towards the high, and then you try again as a bear, and now you open up towards the high. But it's one of those things where because it's an equilibrium, bear traders maybe have a little bit more moxie, right? A little bit more reasoning to say, you know what, like I'm still getting in here, like we're piling in here, and we're going to push this bad boy down instead of it being like, okay, we've tried twice and now we're at the highs and there's no equilibrium type of setup forming. Then it's just, bears just looking weak and passive and not really doing the job that they need to be doing, which is obviously bullish. So, with that being said, we can move on and look towards some other plays here. Let's take a look at the fangs. See how they're doing here. We have Google, who had big earnings and profit taking. You can see we have a gap fill here that didn't quite fill on Friday. A nice doji candle on the daily, and we're opening right in the middle of that range for the most part. So again, obviously bullish. Obviously, after earnings, things need to shake out a little bit. But from a comparison to QQQ here, this candle is a doji, which is stronger than what QQQ's candle was on the daily from Friday, but at the same time, QQQ is now opening somewhat higher. So we could look at the hourly time frame to see if it's different, and I don't think it is. Right? I mean, you're kind of getting the same exact vibe here that we can just trade inside of this range for quite a while. Definitely, if the broader market is doing the same thing. So just from a standpoint, and again, it's only 8 a.m., so there's still plenty of time for this to change. But as of right now, I do think that QQQ has a bullish comparison to Google, which means that Google has um, um, isn't set up as well as QQQ is. And usually, if you're looking bullish in these scenarios, you want to be looking for some sort of strength compared to the ETF. So you want to look for stocks that are maybe at the highs or gapping up a little bit. Those are the ones that you could say, oh, this has relative strength versus QQQ. So, usually there's a decent amount of time where that kind of goes in your favor throughout the rest of the trading day. All right, we got Tesla here. I just have this daily range boxed up here. I mean, it was the high of the move here, and then it was, so you have this gap up open into profit taking, and then this is the furthest the bears can push the price down since that gap up open. So that's the range I'm looking at here. This looks really nice on the weekly as we have a nice little cup and handle here forming. The all-time high is at 488.54. You can call it 488.50. And I think that after that, 500 psychological is a big number. So, depending on how we get to 488, I think that there's a chance that if we get there without using up too much fuel. I think 500 will be just the number that people just push towards. Get to that level. Look to sell off at like 499.50 or something like that if you're trading into that level. That makes a lot of sense to me. From a daily standpoint here, just looking at the overall comparisons from a day trading standpoint, we have a name that closed really strong on Friday, which we like, obviously. Completely different from how QQQ was trading on Friday. We do have price right towards the top of the range here, and we will mark the prior day close here. So we are opening right towards the top and above the prior day close. It's a really good look. And if you really want to get into things here, you could really just kind of go into the market profile, or sorry, the volume profile, and see that we are opening right up towards the valley area high as well, with value moving up. So from an overall standpoint, it's fine. It has a bullish correlation. I think it makes sense to play it. The only thing I don't like about it is that an overall we're in a sideways range. We're in a range, right? Like this is the range. We're trading inside of this range. So even though it's very bullish, I do think that there is something to, understanding that when you're trading in a range here, it can get a little bit choppy. But Tesla, it does look good. Amazon here, good earnings, sell off here. Amazon was interesting because I mean, I'm pretty pissed off that I didn't get in this trade, but you had like this weekly range here. You had the highest price here where the bulls could push it before this big move down. And then you clearly had, this little sell off right here. And then that was a level for me where that was the furthest the bears can push the price down after a nice run up. So for me, this was a pretty important level. It also lined up with, the weekly MAs, and also it was the 200-day on the daily. So this level to me was not only a support level from a price action standpoint, but it was also the 200-day. I tried to get in once, got stopped out, and then I just failed to get back in. And the play was to get back in on this day here because it had this support here, it had this bear break, then it ended up trapping some bears that went aggressive here, came back into the range, which is obviously bullish. This gap up really threw me off. This gap and go here really threw me off. And then you could see on the next day, we kind of opened down below. We broke the new low, and then we tapped this level again. And at that point, this should have been the day to potentially go long at. The only thing that kind of threw me off here is that it kind of goes up against some of the things that I like to do, which is like trading with value and stuff like that. Like you could see on this day here, value was going down, so it's hard to trade that day. It would have been the next day, but I've stopped. I haven't been doing that as much because it just kind of put yourself in a too much of a box, in my opinion. Definitely from a swing trade standpoint. So for me, that would have been the little higher low play to get in, put your stop underneath this 216 level, and then look to get at least to the 50-day, and then so on and so forth. Um, this was a hard day to hold for earnings for sure. Like I mean, that's not a good look, but big earnings play. Now back to today, you can see that once again, this weekly range is now something where bears might be looking for, bulls might be looking for some sort of move to the upside here, and it makes sense from the standpoint of if you're a bull here on the weekly time frame, you have stops up here, you have stops up here, you have stops up here. So a lot of these people are underwater, right? Um, and it's a spot there where if we get back into this range here, they might be looking to dip out. And it's hard to say if they got out prior to that because we had the gap up and then sell off here. So I'm assuming some people might have got out pre-market or during the actual earnings event, but most of the time people are waking up the next day saying, "Holy crap, what the heck just happened?" So I think it's a spot there where, looking down at this level here, it's a pretty wide range, which the hardest part about trading, right? Like you can't just get in. I mean, I guess you could, but you don't want to just be getting in. So you want to have a game plan going forward. So one of the more ideal situations when looking for entries is looking for potentially hourly oversold conditions, looking for daily higher lows, which doesn't look like it's going to be playing a role here because the daily RSI, or sorry, the hourly RSI being oversold would be way down here at 232. And at that point, I would expect some sort of bounce already. And if not, I don't know how interested I am at going along if we go this far down, because then it becomes a problem of, okay, well, maybe bears will try again to keep price back into the range. So that kind of leaves it up in the air a little bit, right? The moving averages are way down here. Hourly oversold is probably not on the table. You could probably do 15-minute oversold conditions, but again, I just don't like the sideways range. Like even if we break down here, it's not really the way you want to go into oversold conditions. You want it to be like, pretty decent selling. So this one, I mean, I think I'm just talking myself out of this trade if I'm being completely honest with you. I mean, I love the psychological aspect of it. I love that we got the weekly close above the level. I mean, that should give bulls more confidence for sure. Looking for a daily higher low after good earnings. You can see that they beat on both ends there on revenue and earnings. And then we had just a sell off here, which is fine. I mean, like you gap up that much, people are going to sell off. They're very happy taking that profit. And you can see it went right to like 250, which is a really, you know, clean psychological number. I guess the other thing we could look for is potential patterns on the hourly time frame, right? Some sort of pattern, looking for a daily higher low. I don't really see much. I mean, I guess you can maybe there's some sort of channel here. I mean, that's not the worst thing in the world. I mean, if we come back up in the morning, we shoot up here, we find some lack of follow through, we kind of fall down here, we get back into this range here, and we pop down here, and then maybe we do something like this. Like I can see something like that potentially happening. So I'll leave that up. I mean, again, I like a little bit more um, confluence here. Where are we opening compared to everybody else, though? Towards the lows too. So even from a comparison to QQQ, apologies. Still a little early. Daylight savings, yikes. Um, it's got definitely a bearish correlation. So we have Nvidia, another one. This was a very interesting trade as it traded sideways for a long time. It gave the bulls this really nice higher low setup. Um, gave them the bull break here, and then just took them all out here. You could see that the close above that level was nice volume here. Got the little higher low dip with the decreasing bull volume here. Got the higher high. Everything you want into new all-time highs. Doesn't even get to 200 and just dips out, stops them out. There was a big battle at this 50-day here. got back over. This was the trade to get into and then sell off. I did get into this trade, but I did not hold long enough. One thing I am working on is just being able to be comfortable with selling partials and just not being like, oh, well, I could have gotten more out of the trade. Um, you hear about Hogarth talking about adding to winners, and it just seems like you know selling off your winners and scaling out of your winners instead of is just like the completely opposite end of that spectrum, right? Yeah, on one hand, you got, okay, I'm scaling out of my position, going to leave a runner. Great. If you're using huge size, maybe that makes some sort of difference in this inflated world that we live in. But if you add to your winners, that just snowballs it, and it just makes more sense. It's just hard to do from a psychological standpoint, and even from managing it, because you could turn a winning trade into a break even trade because you just finagle too much with add-ons. There's always a thing of there's always that case of doing too much, and you just have to. I guess you have to be mechanical with your add-ons too, which can be tough. I mean, like the market is so good at stopping everybody out before it makes its real move, and then not showing any setups to really get into it unless you're just aggressive. So it makes me feel like with adding on, it does have a tendency to potentially just stop you out on your add-ons and then decrease your winners over, the long term. Our NVIDIA here, plenty of room for a daily high or low. This little action here of, this gap up and then into selling. Again, it looks very similar to QQQ. Um, if we continue to see daily consolidation here, I'll probably just call this one move down. I won't say this is like a little daily lower high, lower low, and there's a daily trend change, not after this big move up. So I would still be looking for a daily high or low. 195 is a very likely area for there to be some sort of bulls because it's, obviously the last spot of resistance. So resistance turns into support. Um, And once again, you have the 9-day kind of pushing up there. So there's some confluence in that situation. It might actually line up with hourly oversold as well, which is fine. Um, but again, with these levels here, I always think that they need to be taken with a grain of salt because a lot of the time when it comes to support levels, there's already positions there and they are now forced to defend their positions, which makes them stronger levels. In my opinion, this is more of an area of interest than a support level. Like right down here, like this is a support level. Okay, there's a back and forth here of bulls and bears. Bulls win. There's a bunch of positions here that are bullish that have their stops under this level. So if price gets down to this level here, there's going to be, you know, some defending going on, you would think. But in this case, unless you're an aggressive bull who bought the breakout, and that would be a breakout after 3 days of bullish action, you'd think that there just weren't a lot of people buying here. Um, I mean, I guess I'm wrong. I mean, look at the volume there. I guess people were just in a frenzy. So there was absolutely some. I mean, it's hard to say there wasn't any buying there. There was buying there, but it was aggressive. It was aggressive. It might have been emotional, and there was obviously a lot of shorts being stopped out as well. So I just don't know how many bulls are sitting here with their stop underneath this exact level here, this 195.30. I think a lot of the stops might actually be underneath this 191.71 level, the candle that broke the level. That would be probably the most appropriate spot to be looking. Um, so I think that needs to be, something to think about. So I would want to see daily consolidation on. I would want to see more consolidation on Nvidia. Meta here, not much to say. Not really looking bullish on this one. Under the 200-day bearish correlation, not much to like. PLTR earnings tonight. We do have it's a gap up here. PLTR was interesting on Friday. Busted right over the 200 level, traded sideways, broke bullish here. There was a little bit of volume on this candle here, but for the most part, I was pretty shocked that it just kind of cut right through the sideways level here. And without much volume. So you see that we kind of just like faded all the way back down, not making it look very interesting to go long. But as you can see, overnight the bulls they just take control. I don't know who's doing that, but just seems to happen a lot. But if you're on the smaller time frames here, you hate the way that looked. Like that did not look well. Stopped a lot of people out. We have earnings tonight, so I don't think there's going to be much going on with this name here. There's obviously hype behind the name. This was the day to go long here. As you see, it was trading inside of this little range here. Very similar to NVDA would hold in the 50-day. Once it got back over this level here, traded sideways, bull break. Microsoft, right at its 50-day. Bearish correlation compared to QQQ and SPY. It really is kind of back in this range here. So, I mean, this could definitely be a buying opportunity. I can't believe Microsoft went down this much. I mean, I was looking for a potential short on this day, but I was like, that's crazy. Yikes. But nope. And you can see they didn't show up here. You'd think after this bull break here, but it was a gap up doji. Very weird price action here. Very, very hard to say, okay, this is where the bulls might be. This is where people might be defending because of the sloppy price action. Apple. Again, Apple weakness here. That's definitely a red flag for the market, as Apple is a nice big old name, but I think Nvidia is now the real dancing partner at the moment with all the AI and all that fun stuff going forward. So I think that as important as Apple used to be, I do think that AI and Nvidia are now the real deal. And you can see that with the correlations between it, right? Like you can see that, if you look at all of these names, what looks more like QQQ and SPY? It's Nvidia. It's been trading very identical. But Apple is almost a gap down open after some good earnings and some profit taking. But again, this was a sideways range. It broke bear. Here's your push back up. Here's your back test, and then go. Um, I was in this name for a little bit. I honestly like one of the issues I have is that like I just felt that with this bull break here and how fast it came back to test this range here, I just didn't. I was expecting some sort of shenanigans here. Honestly, I was expecting. I would have liked to see like a bear break, like this inside bar, like a bear break here with no follow through into a move up. Like that's what I was looking for here. I was looking for something to shake out some of the buyers here. And I guess you could have said that like this was enough here because you have this bear break here. They're supposed to get down here, they don't, and then they all get stopped out here. Now you're looking for bulls to hop back in here and go. So it was more of a momentum trade, I guess, because it did have that like trapping a lot of the bears, topping them out, yada yada, which is something that I look for. But I just felt like the trade was a little bit too obvious. And sometimes, well, a lot of the time, if the trade looks too easy, it usually doesn't work out. That's at least from my experience. So that's kind of like what I was thinking. I would have really liked an inside bar bear break there, because at no point there was like, aggressive bulls didn't get screwed on this trade, and sometimes the most aggressive bulls get screwed on this trade. Even though, again, if I look back at things, aggressive bulls going in here get stopped out, and then boom, boom. So it's like becomes an interesting scenario. And at that point, I guess you just say, hey, look, we bounce off the POC, yada yada. You close here, even though it's red. And this is going back to the thing I talked about before, where it's like, sure, is this a red candle? Absolutely. Is the volume on it great? No, it's not, right? So it's a spot there where even if you don't want to get on this candle, then maybe the next day you're patient. I want to see one more day, yada yada. Very low volume on a doji, you could say to yourself, okay, well, I've seen enough here. I'm going to just get in here and put my stop underneath the low of this candle with maybe a buffer. But even if you want to get in on the close of here, it's fine. I mean, you bounce off the daily POC, you close above the range here. That's enough. The fact of the matter that the candle is red here. I tend to put too much weight on that. And also, once again, with trading with value from a day-to-day standpoint, it prevents me because clearly value moved lower there. So, I just got to keep a track of that a little bit better. So it looks like Tesla and what is it, Google? Not Tesla. I mean, Google's not bad. Tesla looks like a very good one. Amazon looks okay. Nvidia could go off today. I think there's a lot of eyes on Palantir today, but look at some of the other names I was looking at. Let's see where Hood is at the moment. Traded this name on. Well, no, actually, I didn't trade this name. I was going to trade this name on Friday, but it was very hard to get in on the morning session, like right here. Like 5 minutes before the market opened, it shot straight up, which really killed a lot of my planning. And then it just didn't really work out. I was worried about the POC here on the hourly. Had a little bit of trouble with it, got back above it. Kind of a head and shoulders here, bear break. So I was thinking it wants to get back up to this level here. Looks a little bit more clear on the hourly. You can see those nice little double top right here. So I was thinking it wants to get back to that range here. It is holding over this hourly range, so that's bullish. Hmm. I don't know if I like this exact look. So, I mean, I really think that this is actually off a little bit now, right? I mean, you'd think it would, higher the move. Eh, it just, I mean, it's kind of a tough. It's kind of you could see. I think the way you got to play this, yeah, I think I messed up because it's not that kind. It's just got to go with that. You got to get all that in there. There you go. All right. Make that red. All right. So there you go. So you got the bill move up, exhaustion, trying to hold, trying to hold. And now we're opening. Let's see what the daily candle is. Okay. And then we have the priority close right here. Okay. So again, you have like a kind of a little bit of a cup and handle here. It didn't quite get to resistance, but it still kind of has the same psychology. Bounced off the 50-day, came back, made a higher low off of the 9-day. We have earnings approaching. We do have the daily uptrend as of right now with no follow through. So you have daily higher low, higher high, broke that level. Obviously, a close of that level would have been more significant, but breaking that level from a price action standpoint is enough. So it's a daily trend change right now with no follow through, which can go either way. Obviously, leaves a door open for the bulls or bears, and we're opening right in the middle of the range here. But I do think that if we're holding above this POC on this hourly time frame, it's bullish. You have to say it's bullish. So there is a part of me that wants to look long here on Hood, looking to get to that 150 level, then up to the 152 level. I will keep this on my screen. One of my um, one thing, some things that I do struggle with is just get. I don't know if it's a case of overthinking things or not being detailed enough. I always think it's not being detailed enough, but on a spot like this where it's like, okay, I want it to hold over the hourly POC. We know that the morning open is kind of messy, right? So just to get in, maybe pre-market and stick your stop under 147, kind of a naive thing to do, right? So it's a spot there where you want to have an idea on the open of what you want to see, and then based off of that, make a move off of. But it moves very fast, right? So it sometimes becomes difficult to make a game plan, and that's where I think that like I can make a game plan all the way up until 9:25, like on this name on Friday, and then 5 minutes before it opens, it makes this huge move and just screws up the whole entire reissue of the plan, right? So it becomes a spot where it's like that's where I think that I am being too nitpicky in that situation, because why should a whole game plan be trumped within 5 minutes, right? Uh, and then the other side of it is that like maybe I'm not being detailed enough of what I actually want to see, and because of that, I'm not quick enough to get in on um, what did I just do? Not quick enough to get in on the actual trade, and there's a little bit of a blind spot there. There's a blind spot there, but this is an hourly time frame. This is an hourly high or low. It's giving a little bit of like a rising wedgie feel, with this higher high, no follow through, higher high with some profit taking. So it does kind of give it that, but I don't think it's enough to really have any real conclusion off of that. As for the pre-market levels, we have the pre-market high up here, which should be marked out. Pre-market high, and then here's your lows down here. So we know that the pre-market levels are somewhat important. They definitely mean less being inside of the prior day's range instead of outside the prior day range. So I think they definitely mean less, which gives more weight to the 150 and the 143s, which is once again the high of previous day, the low of previous day. But there's a range inside of a range inside of a range. So the range on the morning is going to be between, I guess, the 148 and the 146, and the hourly POC right smack in the middle. I don't know how. I mean, I guess it gives like a slight edge to bulls there, right? it gives a slight edge that the pre-market high will be broken, and we might not even test the pre-market low. But there's so many ways that it could shape out, that to think about all of those ways and then being able to create a plan off of that, that's the hard part. So it's got to be more of like a, this is how I trade. If it doesn't fit the way I trade, I don't take the trade, right? So it's like an NFL team basically saying, we're going to run the ball, and we're going to run a lot of play action, and we're not going to be worried about their good defense. We're not going to be worried about, okay, their defense plays a lot of this, so we're going to have to change the way we trade for that. um, I think there's a little bit of that going on, and that is an interesting thought. So it has to shape up the way. So if I said something like, okay, well, I wanted to pull back and break through the hourly POC with no follow through, and then pop back above, then I'm in, stop underneath the low, looking to get to 150, and so on and so forth. Like that would be the trade, um, which is kind of a bummer because you want to see the bear move before the bull move, which means that, um, with the bull move, I mean, like, you know what? Like you could have two different things. I remember on Hood on Friday, I had something similar, but it was on a very small time frame, and that was the problem. I don't like working on those really, really small time frames because it just happens too fast. But it was this little, like, it was a bull move here. Where was it? This is Friday. Yeah, I think there was something like right here. Oh no, maybe it was like there was this. I don't know. It was like a higher low. It was like a 1 minute higher low off of a level. Yeah, I think it was right here. A 1 minute higher low off of 145 could have been a nice scalp trade. And I was just like, yeah. So that, I mean, that would have been the bull way to look at it. So I don't like the bull way to look at it as much, because the bull way would be potentially getting over here, back testing, and then getting back up there, which I don't love. I think I would like the bull one better if we kind of got back above here, was trading sideways a little bit, and then get up there. That could be a good bull trade. Hmm. All right, hold on. Let me just see real fast. I want to take a quick break, but I want to put up something. Okay. Okay. It doesn't let me oh no. Is that gonna let me do it? I guess not. All right, I'll just do um bunch of there we go. Let's picture Betty. Be right back. Oh, still getting used to the whole thing. Forgot the camera was on. But you get to see Betty, so that's cool. So where are we at? Hood. Okay. So yeah, I mean, this move here, you have a sideways range here, you get the bull break, you stick your stop underneath here. Oh, I just messed that up. That's great. You maybe do it. Maybe you add like a buffer. Let's see what the buffer would look like here. Like 42 cents if you use the ATR on the hourly time frame. So if your stop needs to go right there, yeah, another 42 cents, call it 70 cents. You don't want to put it like down here and then look to get to here. Or that's 2.5, or you get up here, 0.6. So that's not the worst trade. I mean, I like that better than dealing with all this shit. All right. Why did I do that? Um, okay. Looking at OKLO. I mean, I don't know how much I like a short today with the market doing what it's doing. But I tell you what I like about this short here, if you are to short this name. I mean, there's a little bit of a range here. That price came down and held. So I do think that there was some, buyers protecting here, which is great. Very hard to trade to get into. If you look at the hourly time frame, it was tough because it was starting to look like a bear flag. Higher high, no follow through. Then it got some takeoff there at the end of the day, but you don't want to be buying this into the end of the day. So it was obviously the overnight that pushed it way up here. So, you know, this little double top here was very bear flaggy. But now that there is clearly some sort of buying pressure there, you can make a case that, okay, we're on uppity up and we're back above this little sideways range here too. But then you have this little inside bar. You have like this little, it looks like a higher low here. Up around the hourly, it looks like, defending this little support level here, which was the base of this. So kind of getting back into this range. Now wanting to break it back above this range, you get attack this stuff here, right? So the spot where you see the bulls hold here, inside bar, bull break here. That should have been the go signal, right? That should have been the go signal. Let's get going here. Let's get back up to the volume nodes of up here. And what ended up happening, and it ended up being a fake out. So this kind of hits a lot of, you know, it crosses a lot of items off the list that I look for when taking for a trade. And one of those is, if I'm looking in a certain direction, I want to see the most aggressive of that direction get stopped out. And then I want to see the other side almost getting tricked. Like seeing both of these in a setup before the actual move, in my opinion, can be tricky to look for, and you probably miss a lot of trades. But if you can see it on the chart before you start getting interested, I think it works well. So here's a spot here where this was clearly support, and then we broke through it. So these are like I would call these the most aggressive bears, right? The most aggressive bears trying to get down to the lows here potentially. They aren't able to complete that transaction, and now once again they get stopped out here, because usually when people get in on these candles here, they'll put their stop above the high of the candle. So I think these people got stopped out, the most aggressive bears. Then you start to lure in some of the bulls here. You lure some bulls in on the back test here. You lure some bulls in on the double bottom here. And then you lure some bulls in on the bull break here. And then they get caught. And now they're really on the fence here, looking to hit that sell trigger if this level gets broken, in my opinion, right? Because you have like this bear kind of price action here. You have this bull break with no follow through. If you get this bear break here, you could see price getting right back down to the lows and maybe testing that 110 range. So that's why I like this trade setup. Um, the things I don't like about it are that it is above the 200-day and the 50-day, which is usually bullish. Um, so that's kind of an issue for me. And the broader market is now looking kind of strong in the morning, unless it just sits pretty in that EQ. This is one of those trades where I'm probably not going to take, and if it works out, I'm going to be hard on myself. But yeah, I guess we could look at the hourly time frame and look to see if kind of looks just like a range here, right? Like we're at the bottom of the range here. Price is giving us a level to play off of. I mean, this little sideways range here is nice. You don't really want to see price break the highs here. So you could use this as a level here. You want to see a breakdown here. The faster the breakdown, the better. So there are probably two ways you could approach this. The first one would be you have a run up into this range here, you fail, right? So you just want to look for the rejection here and you get in, put your stop above the highs here. Or, you know, if there's an aggressive play, you look for a quick little higher low off of that level and then going down. Those would be the main plays there too, in my opinion. I mean, it really does look like a good short. WFC. This one is pretty self-explanatory. It's got what looks like some sort of like what is an ascending triangle type deal. You have one, two, three touches here. So this is where the trend line started. There's your second touch. There's your third touch. You have this flat top here. You have the higher lows being short. I have seeing less follow through. Uh, It's a standard pattern. It's a bullish pattern. We're above the 9-day and the 50-day and the 200-day. Like, there's a lot to like about this one. I mean, you could say maybe it's a little bit late because it is the higher low is way down here, but you do have this little higher low here. You have this little fake out here last week, so I'm stopping up maybe some of these people. Oh, that was on the monthly last month. Yeah. So it makes sense. These ones are kind of hard to play because you either want to play them here and then potentially sell some here. Playing the break on this is really tough too because it's a daily setup. So you literally have to wait for you to either play the break immediately, which is obviously aggressive because a lot of time that doesn't work out, or you wait for the daily close and then you get in. Um, oops. I guess there's a world where you can look at the hourly time frame and look for a higher low, something like that. You could always go down a time frame, daily, hourly, knowing that if you find a seb there, the risk will be less for sure, but the probability of the trade working out might be worse or will be worse more times than not. So you got to pick your poison. That's the hard. That's so hard to do is pick your poison because you could literally be right about the trade and just pick the wrong idea, wrong time frame. There's so many things you could do that mess up a trade. And then QCOM. This one I did trade on Friday. It looked really nice on the daily. Had this nice little big move up with volume. Then on the daily, it had 3 days of just very low volume, decreasing bull volume here. Um, I'll actually zoom in for you and show you guys how I got into the trade because this is the kind of trade that I like. I was a little bit late on the entry though, if I'm being honest, but it was like we were opening in the range here and we were sort of towards the low of the range. So it wasn't an easy trade, but I was looking for either a big move up in a back test or a move down with a fake out. So as you see, we opened here and we saw this big push down underneath the 177.19, which was the previous day's low. So it cracked that and then it whipped right back up. So I actually got in around here on like this little like higher low right here, this little 5 minute higher low. So I saw this, said, okay, I want to get in this trade. Waited for a little bit of a pullback, got in, and then and then put my stop under here, which wasn't. I mean, it was a pretty big risk because of how big the wick was, but I didn't want to miss out on the trade, so I got in here, put my stop under here with the buffer, and then ended up taking it off towards the highs of this range here. As you can see now, I was pretty bummed because I was looking for this little hourly higher low here as well. As you see, it was a sideways range, so I had the bear break, exactly what I wanted. I wanted this little higher low here, but it was late in the day on a Friday, and I just wasn't sure if that was like the smartest thing to like make a late Friday day trade and then try to hold over the weekend. It seems a lot to get a little bit of money, um, and I just didn't. I wanted to get back into this range. I have to get better at understanding that even if it doesn't get back into this range, it's still strong. If you see a strong signal, it's worth getting in on. And I just wasn't sure if this was the right one because you had this big bear volume and then you had this big pushback up. But look at the volume on that big push up. There was like nothing on that candle. So it really wasn't enough to convince me to get into the trade. But if you go to the 2 minute time frame, you can see that there was actually a really nice 2 minute cup and handle here. Sorry, inverse head and shoulders. You have the shoulder, boom, there you go, perfect. You could have got in on the break of that candle there. Uh, you could just put your stop underneath here, or if you want to be a real sicko, you can put your stop underneath here with a buffer, which is fine. Um, and then say to yourself, okay, either that is the hourly high or low or not. I think it's aggressive to put your stop underneath here. I think it's better to put your stop underneath here. and then that was. But I just wasn't zooming in on the 2 minute. It's just a little bit too much. It's a little bit too zoomed in. I like the 5 minute, 15 minute a little bit more. But oh well. So again on this name here, like if we want to or just erase all of this other stuff now. But these are the trades that I keep finding myself getting into and then getting out because I'm so used to being like that day trader that gets in and gets out of trade so fast and doesn't want to hang on. Definitely on a Friday, which makes sense. I mean, I can give myself a pass on this one. But if you look at if you look at this whole entire chart here, it's like you had the bull break over this level here. You had this nice, really strong bull move with volume. You have the exactly what you want on the consolidation. You know, it's just okay. Now you have the daily high or low. Where does the daily high or low end, right? Because it's a spot here where if you're trying to do a measured move, I don't think you could use this candle. Like you have to like use maybe this guy. So if you use this guy, it pulled back like over 50% still. So it's like you're not going to get a higher high here, most likely. Not unless you see some serious volume. And if you use the bottom of this candle here, it's even more of a pullback, right? So I think that what you want to say to yourself is most likely the scenario is going to be a daily lower high, right? Which means that you do have room though. Like if it's going to be a lower high, like right up here at this 187 level, is going to be a 0.382. So it's like you should at least be able to get to there. And that's the mindset I need to do when I get even if I get in on that like that entry that I got in on, which was technically an hourly play, so I should have been able to hold on more, but it was a whole Friday thing. But as you see, we're trading sideways above this level here. Let's go back to the hourly here. I like the 15-minute here, I guess. Better. Again, we're trading above this level here. It's a gap up open here. This is one of those situations where we can just see an open and then a shot straight up because it already has this base here. And unfortunately, if it does shoot straight up, like you're not going to get much of an entry anywhere. Like it's not going to do this. Like usually when you see like this buildup of pressure here, even if it's pre-market, like it's either a failure and then maybe they try again, or just a complete failure, or just off to the races, right up to the level. And you're like, oh well, that sucks. Like maybe you can get on a 1 minute high or low, but that's really it. So then you become the day trader. As from a risk reward standpoint, let's say you got in on like some sort of break. You're still getting decent. Like from a structure standpoint, we can go to the hourly, and I mean you have this little inside bar with a move up into some profit take. So I mean I guess this level right here is somewhat to be looked into, and then I mean I guess you got to look at this level. I hate just adding levels because then I just want to sell partials when I get to them. Um, it's not much of a level. There's not much volume there, but you just gotta. This is where the volume is. I like this 187 level. That level makes the most sense to me. So yeah. All right. Well, it's 9 o'clock. I'm gonna wrap up. I think I'm gonna do this every day because it helps me think. So I will talk to y'all later. Take care.